Hey guys, and welcome to the Working Money Channel. So this one from BondCrypt XRP, the IMF warns accepting crypto as legal tender is a step too far. So listen to this, the IMF clearly does not want countries to start accepting Bitcoin like El Salvador, for example. So the International Monetary Fund has warned that accepting cryptocurrencies as official currencies is a step too far. Here's a tweet that they put out a couple of days ago. Privately issued crypto assets like Bitcoin come with substantial risks. Making them equivalent to a national currency is an inadvisable shortcut. Read more in our IMF blog by the IMF's Tobias Adrian and Rhonda Weeks Brown over here. And so they link the blog in this tweet thread. They are saying, in this blog post, they are saying the IMF warned that crypto assets like Bitcoin come with substantial risks. It expressed that using them as national currencies, which is exactly what countries like El Salvador are planning to do, is an inadvisable shortcut. It also reiterated warnings that have come from many central banks around the world on the fact that the value of cryptocurrencies can be extremely volatile, and expressed concerns over the fact that they are denominated in their own unit of account. These all sound to me like buyer beware kind of problems. I mean, if you understand the fundamentals of Bitcoin and if you buy low and sell high, you're kind of laughing in a lot of ways. And in these countries, like El Salvador, like Cuba, who recently said that they are going to accept cryptocurrency as legal tender as well, you've got to understand that Bitcoin will go a long way if people end up buying at the right time and hodling and using their Bitcoin for purchases, right? I did a video just this morning. If you guys didn't catch it, I'll link it up here in the top right-hand corner, which outlined Willy Woo's assessment of the Bitcoin market and how we may not actually see another bear market. We might just continually see a prolonged bull market marching our way up. As he puts it, I think he said it was a drunken march on the way up, which means essentially new highs, higher lows, higher highs for the foreseeable future. And with regards to the impact on policy, Bitcoin, for instance, reached its peak of 65,000 in April and crashed to less than half of its value 2 months later. Between the lines, the IMF has the same concerns that most every financial regulator has been hawking, that they cannot control the price of cryptocurrencies like Bitcoin, Ethereum, and more when they want to. So that is also a concern of the IMF. Interesting to note that. I wanted to thank BondCrypt XRP for posting that. Also wanted to get to this, guys, this with regards to Ripple partner Standard Chartered. They will be launching a blockchain trade finance platform in joint venture. So this brought to us by XRP Crypto Wolf. Haven't seen him in the space for a while, so just wanted to welcome you back, buddy. The Olia platform will leverage blockchain tech in a bid to connect institutional investors to businesses requiring supply chain financing. So international banking group Standard Chartered and a supply chain fintech service company in China will jointly create a blockchain-based trade finance platform. The venture-based SC and Hong Kong exchange-listed LinkLogis Inc. LinkLogis, I guess that's what they're called, will see the creation of the Olia platform. Olia will focus on connecting institutional investors to businesses requiring supply chain financing by leveraging blockchain technology and artificial intelligence. Headquartered in Singapore, Olia will be helmed by SC Ventures Managing Director Amelia Ng as CEO and LinkLogis' Vice Chairperson Letitia Chow as Deputy CEO, according to a press release on Monday. So that just coming out today. We know these guys, Standard Chartered, also heavily invested in Ripple, so they have a vested interest in Ripple also doing well. This just back from 2016, just an article from Standard Chartered's very own website. Standard Chartered completed a strategic investment round in Ripple at that time, and now to launch a blockchain trade finance platform in joint venture with this company in China. Big moves here, guys, from Ripple partners, Ripple-related companies. The ecosystem is certainly growing. Cryptocurrency obviously becoming more and more prevalent around the world. Want to keep moving, guys. This with regards to what this former SEC enforcer says about what his former employer is doing with regards to cryptocurrency. So this is Ashley Ebersol, and here is his opinion on the matter with regards to the SEC. So we know the story, right? Cryptocurrency landscape is basically the Wild West right now, and the SEC wants to tamp it down. And if I continue down here, as Ashley Ebersol, a Washington-based securities and financial regulatory partner with Brian Cave Leighton Paisner and a former SEC enforcement lawyer, said, he told Karen Webster in a recent interview, "We've already got the laws and infrastructure in place to regulate cryptocurrencies in ways that would benefit all stakeholders." So he is saying, look, I don't understand why this is not happening. We already have these laws put into place. Accomplishing that, however, will take a meeting of the minds between the enforcers and the private sector to help cryptocurrencies move beyond speculation. And we know the private sector, at least in the case of Ripple, they have been on board. They have wanted to cooperate. As Ebersol says, for cryptocurrency or decentralized finance generally, to reach its full potential, regulators need to figure out what their stance is going to be. And hopefully it's going to be a more reasonable and accommodative one. The reality of the crypto arena is that it's not as wild and woolly as some critics might charge. Ebersol noted that the Wild West tenor of the cryptocurrency industry has been tamed a bit, certainly since his own time with the SEC, which stretched from 2015 to 2019. So back when he was with the SEC, we've got to remember 2015 to 2019, that would bring us 2015 was in and around here, so the lows of Bitcoin prices before it rallied up to highs in 2017, late 2017, and then 2019 would be in and around here. So he has definitely seen a full Bitcoin market cycle, the ups and the downs. I think his opinion on this definitely worth listening to. Back then, he told Webster, with the rise of initial coin offerings and various crypto-related touts, there were people who did not have legitimate projects, as we all know. They were just trying to perpetrate fraud. There were fewer of those types of projects these days, and the markets have matured a bit. That means we're less likely these days to see significant sums of money being committed to projects that do not have a coherent compliance strategy in place. That's moved the industry away from the just do-it-yourself mindset that marked the end of the last decade, when individuals and firms thought they could or should create new assets and exchanges without the aid of lawyers or regulators. So gone are, at least in his opinion, gone are the days of the real Wild West for cryptocurrencies. And now, entering this new decade, cryptocurrency adoption, first and foremost, front and center on the world stage. And this is why I think a lot of us are scratching our heads with this SEC lawsuit, and why so many of us think that there's something nefarious going on. The fact that Ripple has always been this way, has always been compliant, has always been transparent, yet, ironically enough, they are the ones in court and not the illegal ICOs and not the companies perpetrating fraud, right, as Ebersol states. How does that even make sense? Broadly speaking, the SEC contends that XRP is a security and therefore should be regulated as such. Ripple says the token exists as a medium of exchange used in domestic and international transactions, so it should not be treated as a security. This article goes down, talks a little bit about the Howey test, the framework, all the reasons why the SEC is pulling Ripple into court. The regulators contend that crypto players need oversight, but those entities argue that using 80-year-old law to regulate digital technology is a folly. But as Ebersol asked rhetorically, why wouldn't Howey, which is based on principles after all, be applicable? And he added maybe it's the case that applying Howey yields the conclusion that XRP is not a security. So he's taking a bit of a different approach here. He says there's a reason the SEC's lawsuit focuses on historical conduct. If you look at something like Ripple today, he said, you're going to see an ecosystem that may be sufficiently decentralized that it would not be classified as a security anymore. So similar to Ethereum. Extrapolate a bit, and depending on the level of decentralization, contended Ebersol, the SEC would likely have to defer enforcement jurisdiction over XRP to the overseer of the derivatives market, the CFTC. But what he's saying here is exactly what Ripple wants to prove. Basically, XRP is more similar to Ethereum, and since Ethereum has that clarity and has been given that clarity based on Mr. William Hinman's speech from 2018, XRP should be good to go. Ebersol continues by saying, I think it's going to be tough for these markets and instruments to reach the size and potential that many have forecast for them without some sort of regulation being imposed. So we are going to have to see that regulation, obviously, if we want this market to grow to the size that it needs to grow to really kind of see price appreciation, to really kind of see these tokens that were invested in really solve problems. These are going to be the tokens of the future. These are going to be the tokens that really take up the lion's share of the crypto market cap in the coming decade. And so this is what all us XRP hodlers are waiting for. Ebersol stated that one can still buy DeFi coins and other cryptocurrencies and conduct transactions in them on centralized exchanges, so on and so forth. So this goes on, talks a little bit about DeFi in the SEC. I will link the rest of this article, guys, in the description of this video. Wanted to just mention this because this guy, former SEC enforcer, and basically states, look, there is a lot of evidence there to suggest today XRP is decentralized, but we got to talk about, the different time periods for XRP. Yet Ripple's lawyers already seem to be one step ahead of the game and suggesting that, look, you've already classified Ethereum as one thing. Let's do the same for XRP. I'm going to keep moving, guys, because there is quite a bit today. The Monetary Authority of Singapore, this from Michael at Val5 Links. Today they announced 15 finalists for its Global CBDC Challenge. So this just happening with the MAS, which has a connection to Ripple. Today they announced 15 finalists for its Global CBDC Challenge, a competition to develop retail central bank digital currencies. So just some fast facts here. According to the MAS, the Global CBDC Challenge attracted over 300 submissions. They give the name of some of the finalists here. So Australia's Ants Bank Group, BIT, a Barbados-based blockchain company, and there are a few others down here. Citibank's one of them. The initiative was launched in June in a partnership with the International Monetary Fund, the World Bank, the Asian Development Bank, the United Nations Capital Development Fund, so on and so forth. So some heavy hitters there. And so these guys, they're basically being shortlisted to create a new CBDC. I just thought that was kind of fun information to bring to you guys today. It does relate to the ever-evolving world of cryptocurrency adoption and development that we're seeing, not just in the Western world, all around the globe. Many of these countries getting onto CBDC. So this is going to be central to the way we perform payments, whether it's on a domestic scale or an international level. So I just thought I'd bring that to you guys. But finally, I just wanted to mention this with regards to the CFTC Commissioner, Dawn Stump, and what she reveals are 10 points to consider while evaluating whether a digital asset is a commodity and if the CFTC has jurisdiction. So in this article, they talk a little bit about Ripple's XRP. Is your favorite cryptocurrency a security or a commodity? And if it's the latter, will the commodities regulator be looking at it soon? This has become a pertinent question for investors even as Ripple continues to square off with the SEC over whether XRP is a security or not. A commissioner at the CFTC, however, took a dive into the 10 things to consider before deciding on whether your favorite token is a commodity and if the regulator will be taking a keen look. So here's Dawn Stump. She outlines a framework here, basically describing whether the CFTC would have jurisdiction over cryptocurrencies such as XRP or if it is within the realm of the SEC. The PDF is actually listed, so I downloaded this PDF, but it is actually listed in here as a link right here, okay, under the word stated. It is a hyperlink, and this will bring you to this next PDF, which I'm going to show you guys today. So digital assets, clarifying CFTC regulatory authority and the fallacy of the question, is it a commodity or a security? Just a quick little side note, actually, before I get into this, just referring to this last document that I talked about with regards to Ashley Ebersole and his opinion. He was the former SEC enforcer. So just to his point here, he also agrees there's a reason the SEC's lawsuit focuses on historical conduct. If you look at something like Ripple today, he said you're going to see an ecosystem that may be sufficiently decentralized that it would not be classified as a security anymore. Extrapolate a bit, and depending on the level of decentralization contended Ebersole, the SEC would likely have to defer enforcement jurisdiction over XRP to the overseer of the derivatives market. So he is of the opinion that it could be split depending on the derivatives market for XRP afterwards, and so that would be jurisdiction of the CFTC. I think that will make a lot more sense once I get into this. So number one, real quick, the definition of a commodity under the CFTC's governing statute, the Commodity Exchange Act, is extremely broad. Therefore, to say that a particular digital asset is a commodity is unremarkable. Number two, the CEA provides the CFTC with two types of legal authority: regulatory authority and enforcement authority. So these are things we all have to think about. The CFTC's regulatory authority includes registration requirements, day-to-day oversight, and principles-based regulation. The CFTC's enforcement action is the ability to bring civil enforcement actions for violations of the CEA and the CFTC's rules. Number three, the CFTC does not have regulatory authority over cash commodities. Okay? So that is, the CFTC does not regulate commodities, and they underline that as a very, very specific point, or those who buy, sell, or engage in activities relating to cash commodities. Rather, the CFTC regulates future contracts on commodities and other derivatives products such as swaps. So they give an example here that illustrates the distinction between commodities, which the CFTC does not regulate, and derivatives products, which the CFTC does regulate. So they do regulate the derivatives, but not distinctions between commodities. So cattle are commodities, and the CFTC regulates futures contracts on cattle, but the CFTC is not out regulating cash cattle markets markets such as sale barns or video auctions. Natural gas is another example, is a commodity that the CFTC regulates futures contracts and swaps on natural gas, but the CFTC does not regulate the transmission and sale of natural gas for resale and interstate commerce. The Federal Energy Regulatory Commission does that. And interest rates are intangible commodities, and the CFTC regulates futures contracts and swaps on interest rates, but the Federal Reserve Board of Governors manages the level of short-term interest rates through its monetary policy. So you can see the CFTC does manage a segment of some of these commodities, but not necessarily the entire thing. So therefore, even if a digital asset is a commodity, it is not regulated by the CFTC. However, the CFTC does regulate derivatives on digital assets, just like it regulates other derivatives. That includes the regulation of trade and clearing of futures contracts and swaps on digital assets, such as the futures contracts of Bitcoin and Ether listed for trading on various CFTC-regulated exchanges. Just as the CFTC does not regulate cash commodities, it also does not regulate securities. That would be up to the SEC. Accordingly, if a digital asset is a security, the CFTC does not regulate it. Because the CFTC is a regulator of derivatives, it may regulate derivatives on securities, such as it does today for futures on broad-based stock indexes. In the CEA and the federal securities statutes, Congress determined that futures contracts and other derivatives on securities may be regulated by the CFTC or the SEC or jointly by both. The answer depends on the specific characteristics of the product and requires an analysis of Congress, statutory framework, and CFTC and SEC rules. Therefore, if a digital asset is a security, further analysis is required to determine where regulatory authority lies for a derivatives product that is a digital asset. Okay, now finally, to sum this up, CFTC enforcement authority distinct and broader than CFTC regulatory authority. So of course, the CFTC has enforcement authority over products that it regulates. And then it gives some examples down here. A trading platform that offers derivatives on digital assets, that would be subject to CFTC's enforcement. That was the case in the recent CFTC enforcement action against BitMEX, for example, and the CFTC has brought similar actions dating back to 2015. Notably, the CFTC's enforcement authority also includes a broader application of anti-manipulation and anti-fraud authority with respect to cash commodities, although the CFTC does not regulate those commodities. Why? Because well-functioning futures contracts and other derivative products rely on a surrounding underlying cash market and may reference cash market indexes for their pricing. Thus, the CFTC utilizes this particular enforcement authority to protect the integrity of the derivatives market that it regulates. For a number of years, the CFTC has aggressively used its broader enforcement authority to deter manipulation and fraud involving cash digital assets, even though the CFTC does not regulate them. Because this distinguishing point is absent from the considerable number of CFTC enforcement-related press releases, it may not be well understood to the detriment of the investing public. So in summary, guys, and here's the final kind of piece to this, to determine the CFTC's regulatory authority with respect to digital assets, ask not whether the digital asset is a commodity or a security. Ask whether a futures contract or other derivatives product is involved. So with regards to the CFTC, we have to ask about the futures contract, other derivatives products, and that's where the CFTC steps in. They do not regulate a digital asset, even if it is a commodity, and regardless of whether it is not a security, of course. As the agency's middle name suggests, the CFTC does not regulate futures contracts and other derivatives that are based on digital assets. This could include, in some cases, derivatives on a digital asset that is a security. If the digital asset underlying a derivative product is a security, further analysis is required to determine the allocation of regulatory authority over the derivatives product as between the CFTC and the SEC. So a very specific definition of what these guys are looking to regulate, not even commodities specifically, but the futures contract and the derivatives products that would derive obviously from that commodity. And of course, there is still that whole issue of would it be classified a commodity or a security? And the SEC obviously has something to do with that part. Of course, Ripple is in court. Could XRP have changed over time? This is another question we have to ask ourselves. But anyway, I thought I'd bring this to you guys, if you were interested in the CFTC's 10 pillars of classifying cryptocurrencies in particular. They've made this document cryptocurrency specific. So again, it will be linked in this article here from Crypto Newsflash. Down here, under this paragraph here, under the hyperlink where it says stated, you can download it for yourself. Of course, we're all still waiting for that verdict. Will XRP be deemed a security or not? And how is it going to be regulated in a broader framework in the United States? So many factors involved, but tell me down in the comments what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.